What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I have three Dividend Aristocrat stocks to buy right now. The dip is there. These guys are very popular dividend stocks. Some of you probably own them, and I'm going to tell you why some of these are on my radar, and I'm going to give you the bonus stock that's on there. So to qualify as a Dividend Aristocrat, one of the things is you need to have 25 plus years of dividend increases. Now, as a dividend investor, that increases my confidence in buying those stocks. It also gives me confidence that I will get pretty much a raise, or like I'm building up a retirement pension to help myself retire. And I know these are going to increase their dividends. I know these are companies that are in demand. And I want to show you guys these ones. So if you're new to this channel, make sure you subscribe and hit this notification bell so you don't miss future videos. We are 6,000 Dividend Warriors strong. Let's check out these stocks right now. So that first stock is Cardinal Health. Now this is a very popular stock. The symbol is CAH. Has a dividend yield of 4.03%. PE ratio of 23.44. Its year range was 44.92 to 62.96. So there still is a dip right there with this stock, and it's a very high yield dividend stock and their products are everywhere in the hospital. Biggest thing that they carry is gloves. I cannot tell you how many Cardinal Health gloves I've used every day working in the hospital. Everybody needs gloves. Everybody needs to use sterile gloves performing procedures. I mean, they have so many things with their logo on it. It is crazy. Dressing changes, wound vacs, you name it, they got it. And I have a lot of confidence in these guys. These guys are definitely on my radar for my M1 Finance dividend portfolio. Once I'm looking into the pharmaceutical slash healthcare section, I'm going to make a little bit of a little pie chart. And this one's definitely on it because one, it is increasing its dividends. Two, it's in the 40s right now. So probably once I get to about 35,000 with my M1 Finance dividend portfolio, there's going to be decisions made. Should I do the financial sector? Should I do the healthcare sector? And Cardinal Health is one of them that I'm absolutely looking into because it's a high yield dividend stock. And I'm going to jump to its dividend history real quick. These guys have a huge reputation of being a dividend aristocrat. And if you see their dividend increases over time, 44 cents, 46, 47, 48, 49 cents right there. And it's $48.72. That's a really nice dividend yield. PE ratio is 23.54. And they have so many products that people use in the hospital. And they got to keep their reputation pretty strong because if they don't, people are probably going to panic sell. So that's the thing about Cardinal Health. They have a lot of products in the hospital that people need. They are in demand. So that's another thing when I look at dividend stocks. Are they in demand? Well, absolutely these guys are with their products that they carry. Wound vacs, gloves, sterile equipment. You name it, these guys got it. Just go to their website and look at how much stuff they have that they sell to hospitals and outside of hospitals. It's crazy. Let's jump to the next dividend stock. These guys are another one that I'm heavily looking at in the future. IBM. They have had a year range of 105.92 to 152.84. And stocks like this and AbbVie are, high yield dividend stocks. They really haven't jumped their price per share, but they have increased their dividends, which make them very attractive. These guys have a ton of cash. These guys generate a ton of revenue. It's unbelievable with these guys as a reputation as a dividend aristocrat. Their PE ratio is 24.04. Market cap is 128.37 billion US dollars. And look at this range, 105.92 to 152.84. And again, it's 4.61%. And once I show you the dividend history, you're going to be like, you got to be kidding me. So in 2014, it hit the dollar range. It's 130, 150, 162, 164. So this is one that, once my QYLD, RYLD, and XYLD start really generating the dividends, I want to buy stocks like these guys. I want to get AbbVie. I want to get some of the big juggernauts that distribute high dividends or a high yield dividend stock because this one's very attractive. 4.61%. And it's 142.25. It hasn't really jumped up as much. And that's what makes these guys really attractive. And this is what I like about them. and why they're on my radar. This is beautiful for retirement pension. 25 years of increasing dividends. How do you say no to a dividend stock like that? This is why this is on my radar. And again, none of this is financial advice for entertainment purposes only. And I have a disclaimer in the description, but this one, dividend investors absolutely love. This one, Cardinal Health, CAH. This one is IBM. I'm like choking on my coffee right now. And things are really hot. The future is bright with IBM. They are a juggernaut. And let's jump to the next stock, and then we'll go over the bonus stock. Here's another one, 3M. It's sitting at 176.28. It has a 3.36% dividend yield. The PE ratio is 17.34. Market cap is 102.39 billion. Its year range is 156.13 to 208.95. The dip is there absolutely. And the thing with this stock is it basically, the big thing when the pandemic hit, 3M masks, these are the N95 masks, they sell those. These are still in demand. They have a lot of products. I mean, just you'll see 3M logos on a lot of products that they carry in the hospital, especially electrode stickers. So if I'm putting an EKG on someone or a telemetry, I mean, that's literally five stickers right there. And then you do a 12 lead EKG, and that's a 3M right there with the logo. Those guys sell those, and unfortunately people are getting sicker, and working on a step down floor, we just about all the time run out of those stickers because people are coming up with chest pain. So these guys are in demand. I also have a Littman stethoscope with those guys. I think they are, like, in my opinion, the gold standard when it comes to stethoscopes, the most popular stethoscopes that people buy that work in healthcare. And you got to guard that with your life in the hospital, or else you could get that stolen. So that's one thing about 3M is their Littman stethoscopes. I have a cardiology stethoscope. It's phenomenal, and the customer service is actually really good too. They also have caps. And I'm just giving you some examples. They have caps that people put on like PICC lines, and those chlorhexidine caps prevent infection, and they just generate a ton of money. They're always in demand. And you'll see Cardinal Health, CAH is a symbol if you guys are wondering, and 3M, which is 3MMM. Those logos are everywhere in the hospital, so they're always in demand. They're not going anywhere. So those are two that are on my radar. And this one is a little bit too. I like Cardinal Health a little bit more because of dividend yield percentage, but this one's a lot bigger and stronger than Cardinal Health. And IBM, how do you say no to that one? And let's jump to the last dividend stock. That final stock, which is welcome to the Dividend Aristocrats Realty Income. The symbol is O. This is the monthly dividend stock. It has a dividend yield currently of 4.18%. Its year range is $57 to $72. So the dip is still there. It's still trying to recover from the pandemic. These guys have always increased their dividend over time. These guys are classified as, how do you say this? They are probably the best monthly dividend real estate investment trust right now. I know that Agree Realty Corporation is catching up, which I did post a video on that. Now, I'll probably put that in the comment box in the top right hand corner for you to check out. And you can also check that out in my video sections. But these guys are such a powerful stock, and they're only going to get bigger. They have 6,000 plus buildings that they're like a landlord to, and people pay rent to them. I mean, they're international. They're in the United States. They're in the UK, a little bit in Puerto Rico. And a lot of their buildings are pretty much pandemic proof and recession proof. And I'm going to jump to their dividend history real quick. I mean, look at these monthly dividend increases. Very slow. They're at 23 cents. They're going to crack 24 cents eventually. They have a 4.18% dividend yield, a PE ratio 68.44. I'm hoping, don't quote me on this. I'm hoping in the next 2 to 3 years they hit 25 cents. They're increasing their dividend each year, as you see, very slowly. And with the compounded annual growth rate that I had with them versus Agree Realty Corporation is a monthly dividend stock, but Agree has beaten these guys in compounded annual growth rate and their dividend speed, basically, with increasing their dividend. So it's going to be very interesting to see Agree Realty Corporation catch up to these guys. They're almost the same models, but Agree Realty Corporation is a lot smaller than Realty Income, but they're such a powerful monthly dividend stock. They're both powerful monthly dividend stocks. And I think those are the two best monthly dividend real estate investment trusts out there. So if you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. I'm going to try to post a video tomorrow. I got a big exam tomorrow. Been studying my ass off, so we'll see what happens. Luckily, I set the tone early for this class. And, wish me luck. I'll try to post one after my exam. And you guys take care and have a good